Hello, how you doing? Brian Howard here, BKH Credit Group and BKH Financial. Want to do a quick video for you guys here. As we're getting ready to wind down 2017, headed into 2018, I know that there is a desire for a lot of you to become homeowners, and I want to help you achieve that goal. Now, I'm not a real estate agent. I'm not a mortgage broker or anything like that, but the key component, there's two real key components to buying a home before you can even thinking about talking to a mortgage lender or a real estate agent, and that is income and credit. You first need to have the income to be able to buy the house, but then you also need to have the credit to be able to get approved for the loan to get the home. And so that's kind of where I come in, is I can help make sure that your credit file is mortgage ready through our mortgage readiness program. And basically what our mortgage readiness program is that's us prepping you and helping you get your credit file mortgage ready. So when you go to a real estate agent or to a mortgage lender, you can go in there with the confidence in knowing that you already have the necessary score in order to get approved for the home that you're trying to purchase. So when I go out and talk to people looking to buy homes at like first time home buyer workshops and different things like that, there are some key tips and strategies that I share with them at all my workshops. And so what I'm going to do is I'm going to share some of those with you here right now in this quick video. I try to knock this out really quick and not take up a lot of your time, but it is very, very, very important, if it is your desire to own a home. And let me just mention, obviously, if you have issues with your credit and there are things that you don't understand and you want the guidance and the counsel and the consult of a professional, someone that has looked at thousands of credit reports. Yes, I'm into the thousands now. I've looked at thousands of credit reports now. Then, please, keep me and my company into consideration. So getting back to what I was originally talking about. So let's really break down some of the key components and some of the key areas and strategies and things that you need to pay attention to in order to have a mortgage ready credit file. So I kind of got my notes here because I didn't want to leave anything out. So let's start first. First off, if you want to have a mortgage ready credit file, you need to get your FICO scores, not your FICO scores. Now, I could do a whole video and spend 30-45 minutes talking about all the different scorecards and all the different credit scores and different things like that. Here's the thing that you need to understand. Lenders use FICO scores. They use FICO scoring models, and there are many models. Credit Karma is not your FICO score. Credit Sesame is not a FICO score. So while a lot of these free sites are great for monitoring your credit and monitoring activity, they are absolutely horrible for trying to depict and determine where your credit score is. So the first thing you need to do is get a good FICO score. Okay. And I can recommend, a couple of sources where you can get a good FICO score. Okay. So number one, get your FICO score, because we need to know where you are at that moment. Now, after you've gotten your FICO scores and you're actually looking at your credit report, we need to look at your on time payment history. 35%, the largest aspect of your credit score, is payment history. So when you go in a mortgage ready credit files, at the minimum has 12 months of on time payment history. So you want to look and make sure that you have 12 months of on time payment history with any credit cards that you may have, auto loans or anything like that. If you look at your file and you don't have any good payment history, then that's something that needs to be addressed, because you have to show that you can manage credit in order to be approved for a home loan. Okay. So after we've looked at your on time payments, now we're going to look at public records. We need to make sure that you don't have any public records on your credit report. Some public records can actually keep you from getting a home loan. Now, like, for example, a tax lien. You have any unpaid tax liens, lenders are typically going to want you to resolve that prior to approving you for a home. So it's better that you know that on the front end rather than find that out, once you've linked up with a realtor and they pull your credit and find that out on the back end. Now, if you have a foreclosure or bankruptcy, you can still buy a home with a foreclosure or bankruptcy on your credit report. The bankruptcy just needs to be 24 months old. The foreclosure typically needs to be at least 36 months old. So basically 2 to 3 years after one of those type of public records are added to your credit report, you are still eligible then to buy a house with most lenders. Okay. Now, after we've addressed that, now we want to look at collection accounts. What accounts do we have in collections? Now, keep in mind, most collection accounts that's over 48 months old really not affecting your score as much as the newer collections. The newer collections are what really hurt your score. And depending on how much the collection accounts is, we may want to look at trying to settle that account for less than the amount and get it, the status change from an unpaid collection to a paid collection. That doesn't really help your score. But sometimes a lot of lenders like to see that those collections are settled. That's why I recommend coming through our mortgage readiness program, so we can actually work to try to remove that collection altogether, so that collection is not even reflected on your credit report. And there are some laws and different things that we can leverage to try to get some of those collection accounts removed. The same thing with charge-off accounts. The best approach with charged-off accounts is to try to get those accounts deleted. And like I said, we can leverage the Fair Credit and Reporting Act. And if we can prove that that charge-off account is not 100% accurate, not 100% verifiable, or 100% timely, then a lot of times we can get that charge-off account removed, and therefore deleting all of the negative history associated with that charge-off. Okay, now let's talk about credit cards. By far, the best way to rebuild your credit is by the use of credit cards. That's just what FICO just rewards people that use credit cards responsibly. Why? Because the way you use your credit card is the best indicator of how you're going to manage your credit and your finances, or how you behave when you have credit, because credit cards are unsecured debt, meaning there's not a debt tied to it. There's not a property or auto loan or anything tied to the credit. So if you don't pay, then there's nothing that the creditor can come after, unless of course they sue you in court or something like that. So because of that, FICO gives you the most points for having credit cards. And so a mortgage ready credit file has a minimum of 3 revolving credit accounts or 3 credit cards. Now you may say, okay, well, Brian, my score is low, so I don't qualify for a credit card, or I don't qualify for revolving accounts. Well, then that's when we have to employ a secured credit card method. And, I can give you more information on that, but just to tell you real quick, that's pretty much where you go to your bank, your local bank, and you put down a deposit for the credit line, and they issue you a credit card for it. You use it and it reports just like a unsecured card. So, but you need a minimum of 3 types of these payments, 3 types of these accounts, and you need a minimum of 12 months of perfect payment history with these 3 accounts. And I have some great sources that I can recommend you that offer secured cards and other revolving accounts that are not hard to qualify for, regardless of your credit. So there are resources out there available for you. You just got to get with the right company and the right professional that can guide you into the right in the right direction. Okay, so now after we've got our 3 revolving pieces of credit, now what we don't want to do is we don't want to apply for new credit once we start the mortgage process. So in other words, don't let anyone pull your credit other than to pull your credit for that pre-approval. Once your credit is pulled for that pre-approval or that pre-qualification, you're not going to apply for any other credit. So you're not going to be trying to get a car. You're not going to let anyone pull, you don't want anyone to pull your credit, if at all possible, especially a hard pull. Okay. You don't want to have anyone pull your credit while you're going through the home buying process, because that kind of freaks lenders out that you're looking for credit, if you're looking for credit, you might be under some financial strain or something like that. And that's not something that you want the lender to be thinking. Okay. The other thing is let's see, we talked about the credit cards. Oh, student loans. So one of the big things that, is becoming more and more of a concern is student loans. I mean, and even student loan debt in itself. Now, there's nothing that we can do about the student loan debt that you may have. Like, we can't just make your student loan debt go away. But what I will tell you is student loan consolidation is a very, very key component of getting your credit file mortgage ready. Because what happens is every time a payment was dispersed to you, the student loan furnisher reports that to the bureaus as separate accounts. And what it does is it creates multiple accounts on your credit file. And so when we actually go in and consolidate, because you've got multiple credit files, or because you're paying student loans to multiple lenders, when we actually go in and consolidate and create one trade line for that account, a lot of times we see a 20 to 40, sometimes 50 or 60 point increase, because we've taken those 10 or 12 or 14 or 16 or 18 multiple trade lines from all of those disbursements and consolidated them into one. So student loan consolidation is very, very, very important in getting your credit file mortgage ready. Now, again, we can't erase the actual debt for the student loans. I mean, if you owe the student loans, you're gonna have to pay them unless you're able to qualify for some type of forgiveness program. But just keep in mind that most of the new guidelines now, they're going to take 1% of what you owe and count that towards your monthly debt. So if you owe, let's just throw a low number. Let's just say you owe $1,000 of student loans, which I know most people that owe student loans owe more than 1,000. But just to keep the numbers real short, if you owe $1,000 for student loans, then they would take 1%. They would take 1% of that, and that was what your payment would be. I don't know what 1% is. I don't know. Is that $10? I guess. I don't know. But so that's just something to think about. Student loan consolidation is very key in getting a credit file mortgage ready. And a couple of other things that don't necessarily relate to credit. Obviously, you need to show stable income and a stable work history. I mean, that goes without saying. You have to be able to show that you can pay for the mortgage that you're trying to apply for. Okay, so just to recap, some of the things that we want to do in order to get a mortgage ready credit profile is we want to get our real credit scores through FICO. We want to make sure we have our on time payment history. We want to make sure we have at least 3 credit accounts open at all times, and that we're using them and paying them on time. We want to address any collections, charge-offs, or public records. Okay. And then we want to look at doing a student loan consolidation, and we don't want to apply for any new credit while we're getting our credit profile mortgage ready. Now, this is not everything that we're looking to do. While everyone has different situations, we can tailor our strategies based on your situation. But these are just some of the common things that we see on credit reports that keep people from being able to qualify for a mortgage. Now, if you need some help and you want to work with a professional and you're serious about getting yourself mortgage ready for 2018, then visit us on the web at www.bkhcreditgroup.com or www.bkhfinancial.com. You can send me an email at brianhoward@bkhcreditgroup.com or brianhoward@bkhfinancial.com. You can call us at 1-800-979-4828. Or you can send us a text message at 678-744-4254. You can message me on Facebook. You can message me on LinkedIn. So there are a lot of ways that you can get in contact with us, and we'd love to help you, because we are advocates of home ownership. I want you to be in your home for 2018. So if home ownership is a desire of yours, then please reach out to us. We'd love to help you.